Will the European Central Bank lead the way and cut interest rates this week? Or could we get a Bank of Canada surprise before that? It's going to be a volatile week for financial markets, so let's get right to it. This is the week ahead here at xam.com. I'm Christina Marucos, and with me today is our lead investment analyst, Rafi Boyajian. Rafi, starting with Europe, it's been well telegraphed that the European Central Bank intends to cut interest rates at its June meeting. Do you think we're likely to see any surprises on Thursday? And where do things really stand on the inflation front? Should we expect more cuts after that?
Well, Christina, as you said, this has been a well-telegraphed move. So it's widely expected that the ECB will basically kick off its rate-cutting cycle with a 25 basis point rate cut. Now, on the inflation front, things have been moving in the right direction. The ECB is in a much better position than the Fed. We've seen headline inflation move closer to 2%, although it's closer to 2.5%. I think that's good enough for the time being, at least to maybe remove some of that restrictiveness in monetary policy. But of course, there's a question mark as to how many cuts they can do in total this year, but not just this year, of course, next year as well, because we have started to see a bit of a rebound in economic growth in the euro area. And in fact, it was that slowdown and that technical recession we saw in the second half of last year that kind of added that urgency for the ECB to move early. And now that we are seeing a bit of a pickup in growth momentum, that might take the pressure off for policymakers to make aggressive rate cuts. And we are starting to see some divisions within the governing council. There's some doves there that want to see back-to-back rate cuts, whereas others want to wait a little bit longer before cutting again. So ECB President Christine Lagarde is going to have a tough balancing act on her hands. She will have to try to balance those views. And it's going to be interesting to see what she's going to say at a press conference, because I think it's all going to be, in terms of the market reaction, it's all going to come down to whether or not Lagarde will signal a further cut in July. And if she doesn't signal a back-to-back cut, is she going to signal further rate cuts for the rest of 2024? Is she going to agree with the current market pricing of at least one more cut, or is she going to sound a lot more caution now that the Fed has had to delay its rate cuts and potentially, maybe there's a risk of seeing some stickiness in Eurozone inflation as well in the coming months.
A day before the European Central Bank, we'll have another central bank meeting, the Bank of Canada, of course. Inflation across the country is edging closer to the 2% target. So could we possibly get maybe a surprise by the Bank of Canada when it meets on Wednesday?
Well, that's certainly possible, Christina, because as you said, inflation really has made some good progress in Canada as well. So at headline figures currently at 2.7, so a little bit of distance there until the 2% midpoint target that the Bank of Canada has. But nevertheless, I think the grounds are certainly there for the Bank of Canada to start cutting, because we have seen some easing in the labor market as well. Overall, I think it's if you are worried about growth and if you are worried about holding rates high for too long, I think there is a strong case for the Bank of Canada to start cutting in June. But markets aren't entirely convinced. There's, I think, about 60% probability priced in by the markets of a cut in June. So should we indeed get a cut, it would come as a bit of a surprise, and it could lead to quite a bit of reaction potentially for the Canadian dollar. But we're going to have to wait and see. I think Bank of Canada might be more nervous than the ECB in terms of moving much sooner than the Fed, because I think there would be a much stronger impact on the Canadian dollar should BoC policy diverge too far from Fed policy.
Well, speaking of Fed policy, a rate cut by the Fed keeps getting pushed further back, and Nonfarm Payrolls out this week, on Friday to be exact, could potentially clear the air on that matter. What is the data likely to indicate about the U.S. economy and therefore Fed policy?
So there are some signs that the labor market is cooling off in the United States, nothing too concrete. And even if we see a bit of cooling off, it's still going to be historically tight. And on the bright side, wage growth has nevertheless been moderating in the last few months. But the problem, of course, the inflation numbers haven't been so good. So I think the Fed will want to, even if we were to get a much softer print this time in the payrolls number, I think the Fed will probably, like we saw in the last CPI report, they're probably not going to want to react too much into one poor jobs report. But I think overall, the numbers are expected to be relatively solid. We might potentially get a headline number of around 150,000. That's lower than what we've seen previously, but nevertheless, it does, when you've got a tight labor market, that's still a pretty solid number. So the Fed, of course, I think, but now we're looking at potentially no rate cut before December, before the presidential election. So for the US dollar, I think there's a risk again that, we could see markets reacting strongly to the data. Maybe if we were to get a satisfactory number, a much softer number for the month of May, the dollar could suffer on the back of that. But unless Fed officials start to change their tune, I think we might see any market reaction correct itself after that.
And Rafi, before I let you go, is there anything else on the upcoming week's calendar investors should keep an eye on?
Well, we are going to basically start the week with the outcome of the OPEC decision. They are meeting on Sunday. They're holding virtual meetings to discuss, what to do with the existing upward cuts. We've got two sets of cuts. The first is one that applies to all OPEC Plus members. The other one is sort of voluntary cuts. So the voluntary cuts might get extended into the second half of 2024, whereas the remaining cuts potentially we might get an agreement that they could stretch until into 2025. So the market reaction on those rumors hasn't been particularly strong, but potentially once we get an agreement, that might boost oil prices in the medium term at least. But I think we also have to be on standby for potential surprises, because we know from Saudi oil minister that he does like to surprise the markets. So it's something that could potentially be a non-event, or potentially it could, really take investors by surprise.
I see. It is going to be a very interesting week. Rafi, thanks so much. This was The Week Ahead here at XM.com.